Hey traders, Nick Shaheen here looking at Netflix. Okay, so this is a Momo stock. Well, we're looking at Tesla right here. Tesla's having a bad day, but it has recent support. But boy, if this support is lost, A, it's the $300 level. It's kind of psychological. And B, it's kind of a zone. It's kind of head and shoulder-ish. If you test the zone so many times and it fails, you carry forward lower, a lot lower. But today's video is about the other momentum stock. So let me take this out. It has played out perfectly. We said it may break down if it loses this level. It came to about half the breakdown that we posted. This was a long trade. And on the breakout, we said level 1 would lead to level 2. And then I drew this zigzaggy thing. And then shorter term, I had another play on it, which was this little guy right here. Some sort of a zigzag, and the upside potential of this is way higher because of this little guy right here, and that's why I put that blue thing right there. And here we are today. Let me go back to the small term. Failed, maybe failing or not. If they bust out of here, I think the bears are in trouble as far as shorting the stock. This is not an easy short, and that is kind of like the spirit of this. So we have greens. At least I shared trades that should have delivered greens. Credit put spreads, calls, debit call spreads. They should all be green. I booked some calls on this poke, and I'm waiting for the outcome. So the note today will be, I booked the calls, and above this, I chase it again. So I rebuy calls above. Why did I book the calls? Because it's a momentum, and I'm long other stuff. I am long BABA, I'm long Tesla. I don't want to be long all these momentum stocks. They move in tandem. If we have a market dizzy, then I'm up creek. So I also have credit put spreads which are almost dead for maximum gains. I will renew those for next week, knowing I have profits in my pocket. So they defended the 360 level pretty well. So anything below 360 for the short term should be support. But only for fast traders. So people with good credit put spread management skills. All right, having said that, so today is a lesson about call calendar or earnings. So the last earnings was a complete debacle for they missed on everything important for the street. I don't think they'll do it 2 in a row. Okay, and I think Reed Hastings hates to lose, big ego. I think they will do whatever they can to blow it out of the water next time, or at least give us what we want to hear. So how do I set up a long trade on earnings now? It's early enough, right? So I think the earnings are inside the October contract, but just like on the 17th, 18th, something like that. So I will take a November trade. So how do I do that? So the easy way of doing it is I take a 395. Let's say I buy the 395 call. Well, it could be the 400 call or the 405. Whatever higher than here. So it will cost me, whatever, $16 to buy it. That's a crap load of money for a lottery ticket on earnings. But it's early enough that I can test the waters. Now, if this falls, I'll lose money fast. So how do I hedge that? I can do it a debit call spread, meaning I buy this one and I sell something above it, like $2.50. Actually, they're only $5 wide. So if I buy the 395, I sell the 400. So that limits my entry cost tremendously, but it also limits my upside potential. So if Netflix blows through that, I have a maximum gains, which is about a little more than double my money. Well, not bad for a smaller risk. That's one way to do it. Or I can do it differently. What is that? I can do a call calendar or a call diagonal. I'm going to use the calendar because it's easier to understand. Same level. So I bought this one, cost me $16, whatever it is. I'm estimating $16. So I do sell one shorter term. So I could sell the October one, but I'm going to sell one shorter week. I think 10-14, 12-ish, 14-ish, something like that. Not the October, the one before it. So I collect money for that. So now I have a call spread of sorts, but this is a vertical spread. This is a calendar spread because I'm playing with time. Vertical spread, same contract, November. Calendar spread. Okay. Now, the entry cost is no longer $16. It's probably, I'm estimating, $10, $9. If I sell the October contract, it'll be a lot less because I think they both include the earnings. I don't want that. So this is a call calendar spread. I sell the short-term one and buy the long-term one. Maximum loss is whatever I pay to enter. So if I do one contract, it's a lot of money, but that's my maximum loss. Ideally, I just wanted to blow through everything by the earnings, but not before 10-12. So if it does blow through this whole complex, I can sell for a lot more than what I bought it. So I can still make money, even if it blows through this. You say, I'm short this, so that's going to lose me money. Yes, it is, but this is going to make me money and my maximum loss is capped. In other words, above this, they may exercise me to be short Netflix. So I wake up and saying, hey, you have a short position in Netflix. And I'll say, don't worry about it. I have the right to buy it at this price. So I'm in the greens. So there's no margin issues. And I like this makeup. So what happens? Ideally, the stock goes like this, and then this expires and dies before the earnings and before price reaches it, and or gets cheaper and I buy it back as time ticks. And then I'm left long this for a lot less than what I paid for it outright. So that's a call calendar. I know it's early to do it, but that's one way of being long Netflix. So if I don't want to buy calls shorter term, I can buy a call spread and play the momentum. Play this breakout right here. And it's doing it as I'm talking. This is open market right here. Let me see it. So it is moving right now. This was a failure. This was a failure. A move above this will let the bears say, we lost this one, boys. Let's go back. So that's where the bulls take over for a little bit. And there's an open gap right here. So this is one way to play a call calendar. But this is more of a lesson on a call calendar. Again, debit call spread. I sell one. I buy one. I sell one behind it to limit my entry cost. Same time frame. If I buy this one and sell one shorter term time frame, it's a call calendar. I played with the calendar. Now, I mentioned something earlier, a diagonal. Same as a call calendar, only if I do this or that. I don't do that. That creates extra risk. I do this. What does that mean? So it means I buy this one, let's say $395. I sell the 400 or $397.5 shorter term. Then even if it blows through to the moon, I still have extra greens because I'm short up here, but I'm long lower. This costs more than that because I get less for selling this one than selling that one. So call calendar, call diagonal. Calendar, diagonal. Why is it a diagonal? Silly, but this is why. Diagonal. Hopefully this helps with the lesson on vertical debit call spread, call calendar, same level, call diagonal. Now all of this works on the put side as well, but that's another lesson. All right, next signing out.